Anthony Deaton. Most people watching or listening to this are not going to know who that is, but he's a very well-respected, very good investor. I believe he lives in Switzerland. I'm aware of maybe one or two interviews he's ever done. But he has a quote that he put out where he basically said, the compelling thing about gold is the risks we don't take by holding it. And so talk a little bit about that being very similar to, I think a lot of Bitcoiners saying the reason why I hold Bitcoin is because I don't want to take the risk of holding dollars or anything else.
Yeah. So Anthony Deaton, I think he resonated with me. You brought up that interview. I mean, I thought he was brilliant. He's a sound money guy. And he was talking about gold. And yeah, so like it's about the risk you don't take when you own gold. That's what makes it a compelling investment for him. He said, the risk you don't take owning gold could fill volumes. And that's why I own Bitcoin. And people don't understand that. They see it as such like a risk on asset, but I see it as a risk off asset. It doesn't have counterparty risk, right? Duration risk. It doesn't have, you don't have to worry about like the cash flows of the business or the management team if you're looking at a stock. All of these things, it's just Bitcoin is this asset that's unchanging. And people don't understand this when they hear about it. They're like, oh, this thing's very volatile. But really, it's very simple the way it functions. I mean, there's only ever going to be 21 million Bitcoin. It's an asset that will never change. And when you look out into the world that is continuously changing with all these different risks, Bitcoin is very unique in that way. And gold is probably its closest comparison. And so when somebody who's a little bit older, like Anthony Deaton, they might be attracted to gold and look at Bitcoin and be like, oh, this cryptocurrency, it's such a risky thing. But I own Bitcoin for the exact same reasons that Anthony Deaton owns gold. And I wonder what you thought when you saw that quote too.
I mean, you said earlier something that I think people don't quite understand, which is if you're a corporate CFO, the dollar is a liability and Bitcoin is an asset. And that's not how they think about it. They think, the dollar is this offensive thing. When you start to understand that the dollar is going to be devalued, when you start to understand that bonds, like, Paul Tudor Jones recently said he owns no fixed income.
Yeah.
I think people are very surprised by that. But it's like, look, if you look at TLT is, something I look at quite often because over the last 5 years, it's down like 25, 30%.
Yeah.
And so you're like, okay, I get, hold to maturity, all this nonsense, whatever. But it's like, no. You're like, you are losing value holding this thing. And so in a weird way, you kind of have to like have this contrarian view of the traditional assets to even understand what Deaton's saying, right? Like so many people are like, what do you mean you're holding gold? Like gold is, risky to me, or Bitcoin is risky or whatever. But then you're like, what do you hold in your portfolio? And they're like, oh, I have cash. Like I'm super safe. Yeah. And you're like, wait, hold time out. Right?
Yeah. Treasury, risk-free asset.
Yeah. Risk-free. I mean, literally, right? Yeah. Like it is non-controversial to talk about a risk-free asset being treasuries. And you're like, well, actually, let me explain how this works.
Yeah.
And so I just think that Bitcoiners maybe, are early to understanding some of this stuff more so. But I always come back to this idea of like, what is it going to take for the public narrative to change where then cash or in treasuries and stuff like is seen as risky? I think that's very hard, right? Like there's still people who, if you go and you ask them like for personal finance advice, like, well, just save your way to financial security. Like, hey, man, that's like way harder now than it was 50 years ago. And so maybe it's time. Maybe it's just like we all get older and then we're the old people, right? Then we like tell our kids or whatever. And you have to change it like through time. But I do think that Deaton is unique in that he's older, but he sees something that a lot of older people don't see because he's had to change his mind about like fiat currencies. Where it's much easier, I think, for young people to be like, what's this new thing? I'm kind of more open-minded. You're more mentally flexible. And so you go and you do the work.
Yeah. Maybe it's some more pain for bondholders, right? I think like thinking about things in real terms is something that people don't think about either. Like taking into account, yeah, okay, I have a bond. I protected the principal and earned the interest. Great. But did you actually outperform inflation during that time? Like, no, you lost out in real terms. I think especially people that might not be as more sophisticated don't really think in real terms. Mm-hmm. And that's so important in this world that's more inflationary. And that's, I think the big underlying theme is we are probably entering this more inflationary world. And when you think about portfolio allocation, AQR Capital put out a really good report on this a couple of years ago, just looking at how the correlation changes between bonds and stocks in inflationary environments. When in the past inflationary environments, they go positive, right? And so all of modern portfolio theory is built around this like inverse relationship between stocks and bonds. Bonds are able to be that buffer when stocks fall. Fed cuts rates, bonds rise, kind of eases off some of that loss for the portfolio. In inflationary environments, that's not the case. They actually move together. And so that's what we saw in 2022. We saw them both crash, and that had everyone scared because they're like, okay, what do we do now?
Where do I hide?
We haven't seen this in like 20 years, right? But AQR Capital he was like, the weird thing has been the last 20, 30 years where interest rates have just gone straight down, and they have been moving inversely all the time. But really, when you zoom all the way out, they actually, for a lot of the times, they move together. And so there's just this regime change where people have to look for alternative investments to diversify now, if they think we are entering this more inflationary environment. And so that's my base case. When I just look out into the world, I see more conflict, deglobalization. I see the demographic situations. I see the spending. All those things are all inflationary. And so if we are entering this inflationary environment, you have to change the way that you diversify your portfolios and how you reduce risk by enhancing returns. And I think nothing is better than Bitcoin. And Bitcoin has shown that over the last, 10 years, you could say.